It's 2025 and everyone's asking, is the US housing market about to crash? The pandemic sent home prices soaring, but now the market's momentum has stalled. Sellers, once in control, are losing their edge as buyers gain power. Inventory is up, demand is down, and prices are starting to wobble. The market's recalibrating, and uncertainty is everywhere. We'll break down what's happening with supply, affordability, and the government's response. Is this a crash, a correction, or something else? Let's dive in and find out. Let's start with supply. In real estate, supply refers to the number of homes available for sale at any given time. For years, buyers faced a tight market, with few options and fierce competition for every listing. But now, the landscape is changing rapidly. After years of scarcity, homes for sale are piling up, both new builds and existing homes. Builders have ramped up construction, and more homeowners are listing their properties, hoping to cash in before prices fall further. In cities like Phoenix and Austin, inventory has surpassed pre-pandemic levels. Neighborhoods that once had just a handful of listings now have rows of for sale signs, signaling a dramatic shift in the market. The exclusive club is now wide open, but buyers aren't rushing in. Open houses that used to draw crowds now see only a trickle of visitors, and sellers are left waiting for offers that may never come. Demand has cooled dramatically. High mortgage rates and economic worries have buyers hesitating. Many would-be buyers are sitting on the sidelines, worried about affordability and uncertain about the future. Gone are the bidding wars. Now sellers are hearing crickets. Homes linger on the market for weeks or even months, and price cuts are becoming more common as sellers try to attract attention. The basic rule: when supply outpaces demand, prices fall. With more homes than buyers, sellers lose their leverage, and the market starts to favor those looking to buy. The power has shifted to buyers, and sellers are scrambling. Buyers can negotiate harder, ask for repairs, or even walk away if the deal isn't right. This growing gap between available homes and willing buyers is fueling talk of a crash. Real estate agents and homeowners alike are anxious, wondering if the market will stabilize or spiral downward. The market's balance has flipped, and everyone's watching to see what happens next. Will sellers lower their prices even more, or will buyers return if conditions improve? Will prices keep dropping, or will something spark demand again? Maybe a drop in mortgage rates or a sudden surge in buyer confidence could turn things around. For now, the market is flooded and buyers are in no hurry. With so many choices and little competition, they can afford to wait for the perfect deal. The question is, how low will prices go? As the market adjusts, everyone is searching for signs of what comes next in this new era of supply and demand. Let's talk about prices. For years, the housing market seemed unstoppable, with home values climbing higher and higher month after month. It felt like prices would never come down, and buyers were left scrambling to keep up. But now, after years of relentless increases, home prices are stalling, and in some of the hottest markets, they're actually falling. The once red-hot demand is cooling, and sellers are starting to feel the pressure. For the first time in years, new homes are selling for less than existing ones, a clear sign that builders are getting desperate to move inventory. They're slashing prices, offering upgrades, and even throwing in incentives just to get buyers through the door. Sellers everywhere are cutting prices and offering all sorts of perks, but for many families, it's still not enough. Affordability remains a huge problem, and the dream of homeownership feels further away than ever. Mortgage rates are still stubbornly high, making monthly payments skyrocket. Even with lower prices, many buyers simply can't afford the cost of borrowing, and that's keeping them on the sidelines. The result? We're facing the worst affordability crisis in decades. Families are feeling squeezed, and the stress is showing up in households across the country. More and more sellers are cutting prices or pulling their homes off the market entirely, hoping for better days ahead. Some are simply giving up, unwilling to accept the new reality. Delistings have surged as reality sets in. Buyers have the power now, and sellers are left wondering what it will take to make a deal. The market is fundamentally different than it was just a year ago. Sellers are quietly retreating, and the days of bidding wars and instant sales are fading fast. The era of easy profits is over. For many, the dream of making a quick fortune from real estate has vanished, replaced by uncertainty and caution. The big question now: how much further will prices fall before buyers feel confident enough to return? Only time will tell, but one thing is clear: the housing market has changed, and everyone is waiting to see what happens next. With more homes on the market and prices wobbling, buyers are staying on the sidelines. Home sales have dropped to levels not seen since the Great Recession. The main culprit, affordability. High prices and mortgage rates have made homeownership a financial stretch for most. The FOMO of the pandemic boom is gone. Now buyers fear overpaying. Many are waiting, hoping prices will drop further. Economic uncertainty and job worries add to the hesitation. The result, demand has slowed to a crawl and the market feels frozen. Until something changes, buyers are content to wait. Builders and investors are changing course. Builders, once racing to meet demand, are now pausing new projects and discounting unsold homes. This slowdown ripples through construction jobs and future supply. Investors who fueled the boom are now selling, adding even more homes to the market. Their retreat signals a lack of confidence in short-term price growth. As investors cash out, downward pressure on prices intensifies. The forces that drove the bubble are now working in reverse. Both groups are bracing for a tougher market ahead. Their actions are shaping the next chapter of the housing story. All eyes are on Washington. The Federal Reserve's rate hikes cooled the market, but now they're cautiously trimming rates to avoid a deeper downturn. It's a delicate balance: cut too much, risk inflation; cut too little, risk a crash. Meanwhile, the White House is considering declaring a national housing emergency. Proposals include easing zoning, lowering closing costs, and making federal land available for building. The goal: tackle affordability and boost supply. Whether these moves can prevent a crash is uncertain. The government's next steps could shape the market's future. Is this 2008 all over again? It's a question on the minds of homeowners, buyers, and investors alike as we watch the housing market in 2025. The headlines are dramatic, and the sense of uncertainty is real. But is history really repeating itself, or are we just seeing echoes of the past? There are some striking similarities. Rapid price gains that seemed unstoppable, a surge of speculative buying as people rushed to get in before being priced out, and now a sudden reversal that's left many feeling uneasy. But look closer, and you'll see there are key differences that set 2025 apart from the chaos of 2008. Lending standards are much tighter now. Banks aren't handing out risky loans like they did before. Most homeowners today have solid credit, and the majority are locked into fixed-rate loans, making them less vulnerable to sudden payment spikes. The U.S. still faces a long-term housing shortage, with not enough homes to meet demand. This ongoing lack of supply could limit just how far prices might fall, even if the market cools. Unlike 2008, today's crisis is about affordability. Sky-high prices and rising mortgage rates have locked many out of the market. But we're not seeing a flood of bad loans or mass foreclosures. If a crash does come, experts predict it'll be a painful correction for some, but not the total meltdown that rocked the global economy last time. Some buyers may end up underwater on their mortgages, especially those who bought at the peak. But for others, falling prices could finally open the door to homeownership. Regional differences matter more than ever. Some markets are more vulnerable to price drops, while others remain resilient due to strong local economies or limited supply. The story isn't simple, and the ending isn't clear. The housing market is a maze of factors, from interest rates to local job growth, making predictions tricky. One thing's certain: the housing market's next move will affect us all, shaping not just our finances but our communities and futures for years to come.